It's Mary Ellen McGonagle, Senior Managing Director of Stocks here at Simpler Trading, and this is your Friday afternoon weekly Edge show. And this is the show where we review what occurred last week as far as in relative importance. Our eye is toward uncovering where the strength currently is and where it is evolving, always with an eye toward helping you uncover stocks within those stronger areas of the market. From my work, this is how you are going to be able to outperform the broader markets. So let's go ahead and get started. Today, I am going to do a dive into the S&P 500, make sure the backdrop of the markets is healthy, and then, of course, uncover pockets of strength within the current markets and, of course, ways that you can capitalize on that strength. But let's go ahead and take a brief moment here and look at some of the more relevant highlights last week as far as news that came out. Corporate earnings were continuing to be in earnings season. It's tailing down just a bit, but still we are seeing a lot in the way of very robust earnings reports, and this is good news for investors because those stocks that go on to do well are names that are coming in with really strong earnings. So super exciting activity happening there. A lot happening also on the economic front with jobless and employment numbers coming out, and they were both good news. We did see jobless claims for last week drop again. They're very close now to pandemic lows. That's people are getting employed again. Very good news. July employment rate fell very sharply, and this is also good news, indicating that individuals are getting back to work. We're seeing a continued expansion of the economy despite the Delta variant of COVID spreading. Next week, important news is going to be both consumer and price index numbers. This is going to be all about inflation. We don't want those numbers to be too high. And then consumer sentiment will be reported next week. This has been a market moving headline in the past where consumer sentiment dropped because of inflation fears. We did see consumer discretionary stocks drop, but so just be on alert for next week's report. So from here, we are going to go ahead and take a look at the broader markets and then some of those sub-industry groups within the markets so that we can really get our arms around what is driving this market. So first up here, we have a daily price chart of the S&P 500. I like to keep my charts fairly simple. What I'm looking for here is the S&P 500 is the index remaining above its shorter-term simple moving averages. That's going to be your 10 and 21 day, the green and the purple line, and then you want those moving averages trending upward. So we do have that in place. Also, your outside momentum indicators, I use an RSI, relative strength indicator. I want that to be above 50 and trending upward. We have that occurring. And then stochastic. This is a faster moving momentum indicator, also above 50 and trending upward. So good news here is that we do have the broader market's strength behind us, and therefore you can put new money to work. So let's go ahead from here and take a look at the underlying sectors within the S&P 500. They are listed here, 11 sectors, but I've gone ahead and added what is called an RSI, that relative strength indicator, and then it is sorted in descending order because I want to see up here on the upper left quartile where the strength is in the markets. Again, this is where we want to focus on because your leading stocks are going to be in these stronger areas. And then the lower right quartile are your weaker areas that you want to generally stay away from. So let's go ahead and take a look. I do have it in descending order. I'm going to do a quick update here, and let's look at healthcare, which has been up here in the forefront, and there are a couple of reasons for that. One certainly is biotechnology, those stocks that are involved in the distribution of vaccines as that is continuing to take place globally as well as in the US with that Delta variant. Also employers and schools are now mandating vaccines, so there's a lot of movement in those vaccine-related stocks, and also on the earnings side, diabetes-related stocks. So hopefully we have time and I can share some of the better names there. From here, we can see XLK. This is the technology sector, and it's always good to see faster moving high growth tech in a leadership position. A lot of this is being driven by strong earnings among semiconductor and software stocks. That's where you're going to want to focus within technology. And then moving along, this is by far the most relevant action that is taking place, and today we are seeing the most vibrancy. This is financials. XLF is the ticker symbol. We're going to drill down to where that strength is, but take a look, because financials were an area that my MEM Edge report picked up on last fall, capitalized on a handful of top performing bank stocks that went on to very high double-digit returns, and I've been on the lookout for this turnaround ever since, and it took place today. So I'm going to share two top candidates in the financial space with you, and on our next view, I'm going to share with you why these financials are on the move. You want to have a good sense for the reasoning behind it so that you'll know that it is potentially sustainable, that turnaround. And then of course your weaker areas, we can see energy still languishing down here at the bottom, not an area that I would focus on. So let's go ahead from here and take a look at some of the sub-industry groupings. This is going to take us behind that sector and really, again, get our arms around where that strength is. I talked about biotech's big move, 4% gain, broke out of a very lengthy base here yesterday, multi-month, implying further upside, nice volume on that breakout. And I mentioned that it is vaccine, but there are other areas in the biotech space that are doing well. Software IGV is the ETF that I use up here in the strength area, because again, I did that RSI in descending order. Let's just take a quick look at semiconductors. They're on another weekly uptrending move here, up 2% versus the market up around 1%. Lots of strength here. Most of it earnings driven. For those of you subscribed to my MEM Edge report, and I will share with you precisely where that strength is and those stocks that are poised to capitalize. It's a very specific area within semiconductors. And then moving on, I talked about financial stocks doing well. And we can see here KRE is the regional banking index, and it's really languished here for quite some time. We are seeing very clear-cut signs of strength. Today's gap up, RSI trending up, and then your MACD also trending upward. But let's take a look at what the driver in these bank stocks might be. And here we are. This is a look at the yield of the 10-year. And the 10-year yield in turn is beginning to rise. We're now at a yield of about 1.29. We are seeing a double bottom formation here on the chart for the 10-year yield. That RSI trending just poised to turn positive. We did get that positive MACD crossover. Strength in the economy is driving these interest rates higher, which in turn is helping these bank stocks. I would argue that is the story for the week, if you will. So from here, I promised I would share a couple of names within financials that are really doing quite nicely, breaking out of a nice base. This is Goldman Sachs, ticker symbol GS. I'm going to mark this up and share with you some of the positive characteristics taking place here. We can see that today's move, it's up almost 4%, has pushed the stock out of a lengthy base breakout. Goldman has been their second quarter back here, this gap up. They reported record earnings, a lot of it being driven by trading activity. These larger banks are not going to be as impacted by interest rates because they garner their income from areas other than lending, which is what normal banks would do. We also can see the RSI up here trending upward above that 50, and then the MACD, you had this early black line up through the red, bullish signal and a continuation to the upside. Another bank stock that I can share with you here that also had a nice gap up today in line with some of these bigger bank names. This is Wells Fargo, WFC, another name that's up about 4%. And I would urge you not to be put off by that 4% advance, because what we'll do from here is take a look at an intraday chart that you can use as guidance. We can see the RSI trending upward. Wells Fargo also breaking out of a multi-month base, a little more positive here on the MACD up here above that net neutral zero, and then we can see the RSI trending upward as well. Let's go ahead and take a quick look at an intraday chart. I tend to use a 1 hour. I don't use intraday all the time, but it can be really quite helpful as far as identifying potential moves to the upside or downside. And we can see here Wells Fargo had that gap up on the open today, has continued to trend upward, and is remaining above these simple moving averages. So we may get a little bit of a pullback. We can see that the MACD is up in the upper quartile of its reach. So look for that pullback. And then if we do get that, you are going to want to buy on this kind of a move where the stock breaks back above its simple moving averages. The MACD trends upward from a lower position, and then your RSI trends upward. That's it for this week. For those of you not familiar, I urge you take a trial of my bi-weekly MEM Edge report. You'll get instant access to my most recent reports, as well as this Sunday's updated news and outlook. Have a great weekend.